Sorry about that, had a frog in my throat. I'm just going to pop this up full size because one of the questions we get asked a great deal about volume price analysis, let's just, oops, there we go, is the whole business of buying climaxes and selling climaxes. And this just makes the point that this is the daily chart, and in fact, let me pop this over onto the weekly, as it's just the same. And I'll do this with the other ones as well. In fact, I think the CAD yen was also a very good example. This was really across the complex. It doesn't really matter what you look at. Here we go. This is on the CAD yen. It is obvious from a volume perspective that there has been a cataclysmic, a dramatic move in price. This is an extreme example. It also brings in this whole business of the relationship between markets, because this was when the risk on sentiment was collapsing out of sight. Markets were falling out of bed. It was all curtains. It was all to do with the COVID-19 and everything else. And the markets were just collapsing. And that was reflected, of course, in terms of the yen. But then you see this climactic sort of price action. And we had volatility triggers. So it's really doubly reinforcing that. We had these huge spikes to the downside, 1.5 tons of volume coming in. And the important point about it is this whole business of understanding the time frame in which these sorts of reversals, this sort of price action, and the time frame it takes thereafter for any reversal in sentiment to take hold. Now, this is a weekly chart, so bear in mind this was March, this is April, this is May, we're now into June, and this is now developing very strongly. And of course, the volume here is distorted by the fact that we've got this absolute 1.5 tons of volume here, but nevertheless, this is decent volume. As you can see, the trend monitor hasn't even started to transition yet, but this is what's happening. And we've got a bunch of positions longer term in terms of risk currencies, certainly in terms of the yen complex, also others in terms of Aussie Swiss, where we long this market. But this is what it looks like. Now, you might say, well, that's awfully interesting, but I don't trade the weeklies. The point is that you will see, I'm not saying you're going to see this sort of dramatic price action on a 1-minute chart or a 5-minute chart, but the principles are the same. First of all, you get a dramatic increase in volume. Then you'll see that volume diminish. It may well also be associated with volatility, as they are here. But it's also the idea that the markets, when these occur, they don't, generally speaking, have a V-shaped reversal. In other words, you don't see the market crashing down here and then it immediately pings back and goes in this direction. This is classical. This is what you'll see. You'll see congestion. So it's very much a case of waiting, being patient. And the reason for that is very simple, as we explained in the program. When you see this in a buying climax, in other words, you've seen a market collapse, you're seeing the buying coming in, it takes time because that selling pressure is monster. There is a huge amount of selling going on in there. And for that to be absorbed by the market makers, the insiders, the big operators, whatever, you know, it cannot be absorbed overnight, because each time a phase of a campaign is prepared, they have to be assured that that selling pressure, or if it's in a selling climax, that buying pressure has been absorbed from the market. And that takes time. It's what we refer to as mopping up. It's a sponge. You have a big spill on the floor and you can't mop it up in one go. It takes 3, 4, maybe 5 passes. It's the same principle here. That is the principle of a buying, certainly in terms of a buying climax. And it was just a classic example here. We saw it pretty much, as I say, across all the pairs, as you would expect. This is the Aussie yen. There we go again, dramatic stuff, plunging in markets. You know, we had the first plunge here, big volume coming in. Then we get another follow through. And remember, obviously, this is being reflected in terms of what is going on in terms of indices. You're seeing this everywhere, bonds, bond yields, the whole lot, commodities, you know, the whole market is in turmoil at this stage. Then you start to see it flatten off. Then you start to see the rally developing. And now we're starting to move away. And you can see here the trend monitor on this particular pair is already starting to transition through into bullish sentiment. And in terms of where this is going next, let's say we've got long positions here pretty much across this complex, and some others as well, because we started buying in once this volatility has started to diminish. We've got in at various points. Next question you've got to ask yourself is, where is this heading next? And in terms of looking at it from both volume and price-based perspective, we've gone through a nice low volume region here. So we're now starting to move up into this much more dense area of volume at this region. We've got some price-based levels on the accumulation distribution coming into play. So in terms of looking at where this is going next, clearly in this region from 74 to 76, there's a ton of stuff in there which is going to cause some issues. We've got a little cluster here of resistance. And remember, this is on the weekly time frame. So whatever you see on a weekly time frame will dominate the slower time frames, because anything to do with time, where you have a level which has been developed over a weekly or a daily or an hourly or a 15-minute, if you're trading down on the 1 minute, it doesn't make any difference. That will carry more weight in terms of what the market is like to do at that point. So you've got a cluster here, a load of volume here. Now, depending on how much volume is driven into this pair over the next 2-3 weeks, if we can get to 76, then we've got a nice little run up to 78 because the volume falls away here. We've got a really nice low volume node here. We are then through this lumpy congestion in price that sits all over around here. So we're expecting congestion. But if we break through 76, we should get through to 78 pretty easily. Then you've got more developing, but it's not quite so thick as this level here, which runs for some distance. And then if we go through there, we're through to 80 and we're off into clear water. Now that obviously is largely dependent, excuse me, sorry, I clicked the mouse. That is largely dependent on what is going to happen in terms of indices and risk on, and whether the markets can continue higher. A lot of that will depend on what goes on in terms of COVID and the follow through in terms of what the pharmaceutical companies can deliver. So much of it will depend on that. There is also the Chinese issue to consider. That will have a huge impact over the next few weeks. Expect volatility. It's going to happen. There's going to be a war of words, and it's not going to be pretty. So there will be reactions in the market, and of course, all of that will be reflected in this particular complex. That's on the Aussie yen. Let's have a quick look at the pound yen, see what the picture is on that one. And again, pretty much the same, but not developing as strongly in terms of the trend as on the others. And that's partly as a result of local politics. And as Anna's mentioned earlier on, we've got Brexit back on the horizon now as well. So that is going to have a big impact in terms of the development of this particular trend for the pound and the pound yen. But again, you can see it developing there in real time. There we go. Let's just pop that one back down again. And this is really where we started with, I forget what time frame you were on, darling, on the pound yen. Was it 10 minutes? I'm on 10 minutes. 10 minutes. Okay, so here we are. This is the 10-minute chart. So we've come back to the start again. This is 8 o'clock London time. Nice example here of weakness. And we've got more weakness coming in here. So what are we expecting to see? Exactly what we're seeing right now. Move to the downside. This is now reversing pretty strongly. 15-second, decent volume coming in here. We're starting to see that transition through to the trend monitor. We're starting to see a break away from the volume point of control. Starting to see a break away from the volume point of control up on 5. Volatility trigger here. So, it's what we expect to see. It's what we expect to see. And just coming up onto, let's click this back onto the daily. There we are. So that's what we're seeing. Let's just go back onto the currency strength. Multiple time frames. There we go. Why is it moving so strongly? Well, we're starting to see very strong selling in the pound and strong buying in the yen. So that's the reason we've now got this strong trend developing. The dollar Swiss I mentioned a minute ago, there we go, it's still going up, so there's still no trend there. That's going in the same direction. So it's a question of picking off, what are we going to look at? Well, if we want to pick at other pairs, we're not interested in the pound yen, we might go pound Swiss. That'll be moving strongly. Nice buying of the Swiss, nice selling of the pound. Nice buying of the Swiss, selling of the pound. Buying of the Swiss, selling of the pound. Equally, we've got the CAD coming off here. That's selling pretty strongly. Again, CAD Swiss would be one to look at. You could certainly look at dollar CAD now. We've got some nice moves going on in terms of dollar. Let's have a quick look at the currency array. There we go. Pull that up, get that out of the way. There we go. Let's isolate out on the pound. Let's isolate out on the pound. Let's isolate out on the pound. There we go. Bish, bash, bosh. Pound New Zealand, in fact, pound yen isn't the strongest. Pound New Zealand is the strongest up at the top here. So, the New Zealand's selling off, pound's buying, nice. Same here on 10 minute, up onto the 15 minutes. We've got similar sort of picture here. And what we're looking for is obviously for the laggards here, the pound Aussie. If this selling of the pound is going to be universal across the complex, we want to see the euro pound going further down to the south. We want to see the pound Aussie pulling up. And if you go back onto the currency strength indicator again, why are we seeing the pound Aussie out of lockstep, if you will? Well, because we've got selling of the Aussie and selling of the pound. So it's back to the same principles where, that particular pair for the time being is not joining the general melee of the other pairs. It's a bit of a standout, and that's the reason why. Just go onto the currency matrix, because what you're looking for the whole time is you are looking for, let's flick that off, not sure what time these are on. These are on pretty quick. Okay. What you're looking for the whole time is, put that back on. Oops, there we go. What you're looking for the whole time is trading with the flow of the market, because if you're trading with the flow of the market, it's a much lower risk proposition. If you're buying the pound and everyone else is selling, then it's a big risk. Now, there may be reasons for doing that, may be driven by local news of the counter currency, but essentially what you're looking for is trading with the universal flow. It's pretty much universal at the moment. This is a little bit standout, but essentially everyone is buying the pound right now. It doesn't matter why they're buying it, doesn't matter why the market's buying it, it just is. That's what's going on right now in terms of market flow. Yeah. Let's just go back to the charts again. There we go. That's just back to the pound yen, which is where we started. There we go. Right, we are going to have to run. Apologies for the late start today. Sorry about that. That was usual technical problems. Let me just give you a quick heads up as to where everything is. In terms of the indicators, you can find them all here at quantumtrading.com. We've got MT45, we've got NinjaTrader 7 or 8, and we've got TradingView. And we are working on TradeStation. Yes, we are getting there. There are two versions of it. There's 9.5 and version 10. 9.5 is the partnership between TradeStation and Interactive Brokers. So if you have an Interactive Brokers account, you can hook it straight through and trade off the screen on TradeStation. It's fantastic. So we've developed pretty much all the indicators for that. And on TradeStation 10, which is TradeStation Securities, that is version 10. That has all the bells and whistles, including radar screen and everything else. So they are two immensely powerful platforms, one driven by Interactive Brokers. So you can trade through Interactive. You've got all the benefits of a fantastic deep discount brokerage account, but using the TradeStation platform. And then, of course, you've got TradeStation Securities, which is immense. And the radar screen is just an amazing add-on to the platform. So that's where you find all the indicators. Thereafter, we will be developing for multi-charts and one or two others we have in the pipeline as well. In terms of the Forex education program, you can find that at quantumtradingeducation.com. It is the complete Forex trading program, and that pretty much describes what it is. It explains everything you need to know. We start with a psychology of trading module, I know a lot of our students, they go, ugh, you know, can I not start with something more exciting? It's what we suggest, it's what we recommend. The reason is very simple, because if you understand yourself, you will give yourself a much, much better chance of succeeding in this business. You will tailor to your strengths, you will understand your weaknesses, and it's just the place to start, because, as I say, that will give you the foundation of understanding yourself better than anybody else, and then tailoring what it is you do around your personality to give you the greatest chance of success. You've got the fundamentals, you've got the relational, technical, mechanics of trading module. It explains to you how to trade, all the principles you need to understand of trading. And then you've got this huge array of stuff. You've got VPA chart examples, how to use indicators, pulling it all together, topic webinars, webinar library is massive, and then you've got a resources section as well. There's over 200 hours in here. You get all the tools and indicators. There's 13 PDF downloads which back up and reinforce everything. I think 8 of them are in the psychology trading module. And finally, you get Anna and myself in the VPA traders room, which I've got over here, the trading floor. We're in there pretty much every day. You can ask questions. You've got fellow students. It's a very friendly place. It's very supportive. We have a lot of experienced traders who are making very, very good money, and they are happy to help those who are perhaps a little bit less experienced. So it's just a great place to learn and talk to fellow traders, and we're there every day as well. So that's it. Anna's site is here, annacooling.com. You can find all the books. They're up on Amazon. They're either in Kindle or paperback version, and the links to all the other places are there as well. And you follow all Anna's analysis there too. So thanks for coming along today. I hope you've enjoyed it. We have to run along. We have to take dear little Bertie for a walk, and we're going to grab a coffee. So enjoy the rest of the trading day. Hope you've enjoyed today. Thanks for coming along. We do appreciate it. We will be back on Thursday at 5:15 UK time. Otherwise, we will see you at the same time next week for the London Forex session. So thanks for coming, and wishing you a great trading day, and enjoy the rest of the trading week if you're not coming along later this week. And we will see you soon. Bye for now.